Hey guys, what's good? I'm Andre and today I want to talk to you guys about what can we do in today's market to make some profits. Obviously, it's a pretty rough time to be in the market and to try to be profitable, right? The QQQs are back in bear territory, the S&P is in bear territory. Nothing is really making higher highs, nothing is showing us that there's a clear influx of money into the stock market and we can be profitable if we invest in this type of asset or that type of asset. So really, if all you do these days is just buy stocks, you're really having a hard time. It's really hard to focus and to get any stock that's gonna make consistent gains, whether we talk blue chip or growth, or you guys call it what you want. Really, it doesn't matter. It's hard to make money in today's market, and it's been hard for the last couple of months. So I want to walk you through 3 or 4 different strategies that you can deploy. They're gonna be sort of on a scale from easiest to most complicated, and we're gonna look at a few different things that we could potentially do as the markets drop back, to either hedge against a drawback and hopefully make some money, or just be as successful as we can and make some profits while the markets are being bearish. So let's jump right into QQQ, into TradingView, and have a look at what the markets are currently looking like. So guys, I want to start by just making a very quick review of where we're at. On a pretty simple Fib retracement, we can see the fact that we blew past the 0.236 level as if it wasn't even there. And then this bar that I have drawn at $329 here was previous support for a couple of times before it was previous resistance. So I was kind of hoping that it would become a new support. No, we blew right through it on Friday, so no dice there either. Guys, really, I can see more downside here. Unfortunately, I hate to be the bearer of bad news, but I think that the 317 level here that I have drawn, not just as a Fib retracement level, but also as a previous support level on a couple of occasions and previous resistance as well. I truly think that we're probably heading there unless we see some really significant market positive news. And if there's any week that's gonna potentially be able to drag the markets back high, it's next week, because we have earnings from a bunch of really important blue chip stocks like Apple, Google, and a bunch of others as well. So first off, have your eyes on the earnings. If guidance and reporting the earnings are gonna be really good, we might see all-time highs again in the markets, but it really depends, guys. Or if not all-time highs, at least a rally, a strong rally back to previous highs or thereabouts. I do want to say though that we might have entered a long-term bearish market on some of the lower cap stocks. I think that the likes of Neo, the likes of Workhorse, the likes of maybe ChargePoint are probably not gonna see their previous all-time highs for a good while now, especially if we're heading towards a recession, or forever, I dare say. But I mean, guys, we never know what we don't know. The recent energy sector shenanigans with everything that happened in Russia caused a huge surge in charge station related stocks, and obviously ChargePoint was a big part of that. You guys know that we covered ChargePoint on the channel here, and we're pretty big fans of that stock. But anyway, I'm digressing. Let's get back to the deal. The S&P is in a very similar boat, guys. That said, the S&P still has a chance to be caught by this 42.36 level here and a bounce higher from that. But let's see where the markets go next week. Now, what can we do to make money? So the first method here, guys, is gonna be to buy stocks. Obviously, that's the easiest one, but it's also gonna be the hardest one. So how do we make money in basically a bear market by buying stocks? Because it's not an obvious one. Well, focus on really great companies and focus on hopefully companies that are paying some dividends. I know that this is sort of everybody's thinking that dividend paying stocks now are more suited to baby boomers than the millennials, but guys, trust me, you're undervaluing the goodness of what high dividend paying stocks can do to your account. And I'm not talking about the boring ones that make 5%, 3% gains a year. I'm talking about stocks that can truly have a very positive outlook for future growth. And honestly, Disney and Intel are a couple of the best ones that I'm thinking of. Now, with those two in mind, so let's say you're not into buying stocks just for dividend's sake. I get it. It's not my favorite go-to either, but again, it's the easiest thing that you can do. So the next best thing, guys, would be to sell covered calls. Now, selling covered calls will necessitate that you have 100 shares of a stock, and this might be old news for a bunch of you guys. It might be super entry level, but feel free to skip through if needed. I'm gonna still explain it. Let's say that you own 100 shares of ChargePoint at $19, or let's say $7 average price. Now, a great way to not only hedge but also make sure that you make some alpha in this market would be to sell covered calls. So again, let's pretend that you own them at $17. What you would want to do is go at either $17.5 or $18 or $18.5 and just sell a covered call. Now, what this will allow you guys is to pocket the $40. This is 40 cents, but you need to multiply it by 100, so you can pocket the $40 the second you sell this. Unless you decide to buy this back and you just let it expire worthless, this $40 will always be yours. Nobody's gonna take it away. Now, everybody is thinking that options are risky, but they're really not if you know what you're doing. What are the outcomes possible here? The first outcome would be for ChargePoint to rally to $18 and you get called away your shares. This means that your 100 shares will no longer be yours. You will still have the $40. The 100 shares will be taken away from you. We said that you had a $17 average price there, so you're gonna make another $100 from the difference of $17 to $18 because you're gonna sell them at 18 again. And that's all. Like, that's the worst that can happen. The next worst scenario, or something that a lot of traders are scared of because they don't realize the alpha that they can generate by simply pocketing the $40 so often, basically every 3 weeks or 4 weeks, maybe even more than $40, is that, let's say ChargePoint all of a sudden rallies all the way up to $22. You bought it at 17. Now you're missing out on $4, so $400 for your 100 shares. You're missing out on all of that alpha. True. That's why you should never sell the covered call below your strike price, and you should never sell your covered call at a dollar amount that you're not satisfied with. So the way I actually identify this is not only the couple of methods I just mentioned, but I also look at the delta and make sure that the delta is somewhere under 0.3 if possible. Okay guys, so this is the next, like the second version that we can use to make some money. I understand that options are not for everybody, so I do want to take a bit, I will move back to options in a second, but before we do that, I want to show you SQQQ. So guys, SQQQ is a triple leverage ETF. Triple leverage means that it moves 3 times as much as the QQQ does, the Nasdaq ETF, and that's very important because it means that it's higher risk. Now, what's worse, or what's even more important with SQQQ, is that it moves in the inverse direction of Nasdaq. So if the QQQ moves down 1%, the SQQQ will move up 3%. And this is yet another way to make money in a bear market, guys. But word of caution, do not, and I repeat, do not hold SQQQ for long periods of time. SQQQ is to be traded as a day trade or as a swing trade that takes 2 to 3 days if you know for a fact that no great news is bound to come into the market. Because if the Nasdaq all of a sudden rallies 3%, then it means that with the 3x that SQQQ generates, you're gonna be 9% down. Obviously, you don't want that for your portfolio. So guys, the fourth method here is gonna be the most complicated, as I was telling you, and it's actually to sell bear call spreads. Now, let's take, for instance, you will always want to do this on shitty stocks, and what more shitty stock can we buy nowadays, or can we sell, can we short nowadays than Netflix? So sorry for any of you guys that own Netflix, but obviously the economic moat of this company is so low, showing signs of weakness for a long time. I think it's gonna be in a world of pain for a long while from now. And I actually wanted to look at the options spread and that's why I opened Webull here, guys. So obviously had a terrible week, as you saw, just falling knife. Over here it gapped down massively, and if we look basically on the daily, it's oversold, which is not a great thing for what we're planning to do. So I might choose a different stock, and that's why I have Square over here on the right. We're gonna see that if we were to do this, we will want to look for a delta of roughly, obviously go lower than 0.39. Okay, so yeah, I would probably do something around the lines of 237. Now, what does this mean, guys? It basically means that we are telling Netflix, or we're telling the market, that we don't think Netflix is gonna spike to 237.5 by the expiration, so by the 20th of May. And if we were to have a look at what that means, it basically means that Netflix would have gains of 13% in 25-30 days. I really don't think that can happen, honestly. So let's have a look. We're gonna sell the 237.5, and to hedge against that, because selling that would be just a humongous capital expenditure, we do not have that luxury. So to hedge that, I'm gonna buy the 242.5 leg for $465, and if we calculate these, guys, we're basically gonna be in the following scenario. We're gonna immediately make $108 that goes directly into your portfolio. Nobody takes it away unless you decide to buy this option back later. Now, our max risk here is gonna be $392. Guys, for any of you that think that 108 is just too low of an investment for you guys, or too low of a return, sorry, for you guys, that means 27.5% of your investment back into your pocket, or just generated within 25 days. I'm wondering what techniques you can deploy to use that or to generate that. Honestly, it's a very hard thing to do, so that's why I really love selling spreads. A bear call spread is just one of the things we can do. And just for funsies, let's have a look at Square as well. Square, not as bearish or not as aggressively bearish, but definitely bearish for a long while here. As we can see, the 100-day moving average acted as resistance here, the yellow one. So if we look at Square, guys, again, looking for that delta of under 3, it'd be roughly $111. So what would it mean for Square to be at $111 within a couple of days here? We needed to rally almost 9%, guys, to be in that position. And again, within 30 days, I really don't think that it can do that. Actually, my bad. We were actually on the wrong option choice here. So let's start from scratch. A delta that's smaller than 0.3 would be, for the right date, would be 122. So this is looking much better or worse. I'm not sure how to phrase this, but Square would need to make 20% almost, guys, in order for this trade to be a losing one. So we're gonna write the 100, give me a sec. We're gonna write the 122 strike price. We're gonna make $440, but remember, we need to hedge and basically generate some money because we wouldn't be able to afford doing that. So we would be buying back the $127 strike price. Guys, we immediately generate $102, and again, it's a 25% ROI in just less than 30 days by basically waiting for time to go by and telling this little thing called Square that it cannot go above what I drew here with the blue line, guys. So we have from $102 all the way up to 122. That's 19% of a gain. We're telling basically the markets that we don't think Square is gonna be able to generate that sort of gains. And yeah, we don't think so. So guys, these are the 4 methods I promised I would tell you about how to generate revenue while in a bear market. Let me know in the comment section below if you have any questions. Like and subscribe. I'll catch you next time. Take care.